Let me tell you a real story. A small manufacturer in India supplies goods worth 50 lakh rupees to a large corporate. The deal is profitable. The order book is strong. Everything looks perfect. But there is one problem. The payment will come after 90 days. Meanwhile, salaries are due, suppliers need to be paid, and banks are not giving loans easily. And this is not one company. This is the reality of millions of businesses in India. In fact, India has over 7 crore micro, small and medium enterprises, contributing nearly 30% to gross domestic product and almost 45% of exports. But here's the shocking part. The credit gap for these businesses is estimated at 20 to 25 lakh crore rupees. With large, overlaid credit gap statistic, that means profitable businesses are starving just because cash is stuck. So, how do they survive? This is where supply chain finance becomes a game changer. In India, business runs on credit. Sellers give 60 to 120 days credit. Buyers delay payments. Working capital gets locked. And when working capital gets locked, growth stops. Salaries get delayed. Businesses collapse, not because they are unprofitable, but because they run out of cash. Supply chain. Finance is not just a financial tool, it is a liquidity engine for the entire economy. It ensures sellers get paid early, buyers get time to pay banks, and financial institutions fund the gap. And this ecosystem is growing rapidly in India. For example, just one platform has already financed over 2 lakh crore rupees worth of invoices, and the overall trade receivables discounting system ecosystem has crossed over 5 lakh crore rupees in financing. But here's the twist. Despite this growth, penetration is still less than 5%, which means the opportunity is massive. Let's go back to our manufacturer. He has an order, but no cash. What options does he have? Tool 1. Factoring. Immediate survival. He takes his invoice, goes to a financial institution, and sells the invoice. He gets 80 to 90% cash immediately. The financier collects from the buyer later. Problem solved. Short-term liquidity. Tool 2. Reverse factoring. Smart financing. Now imagine the buyer is a large corporate. The bank trusts the buyer, so instead of funding the small seller, the bank funds based on the buyer's strength. Result? Lower cost, faster payment, stronger supply chain. This is why large corporates are increasingly adopting this model. Tool 3. Trade receivables, discounting system, digital revolution. Now let's take this one step further. What if instead of going to one bank, you go to a marketplace? On a screen, static composition. That is exactly what the trade receivables discounting system does. Upload invoice, multiple financiers bid, best rate wins. And the growth here is explosive. One platform alone processed 80,000 crore rupees in a single year. Another platform saw 100% year-on-year growth. This is the future of supply chain finance in India. Tool 4. Letter of credit. Trust builder. In many transactions, trust is the biggest issue, so the buyer's bank steps in and guarantees payment. This ensures the seller is protected. Tool 5. Bank guarantee. Risk protection. When performance or payment assurance is needed, bank guarantee acts as a safety net. Tool 6. Inventory financing. Unlocking dead capital. What if money is stuck in stock? Businesses borrow against inventory. Very common in trading and commodity sectors. Tool 7. Purchase order financing. Growth enabler. What if you have orders but no money to execute? Financing is provided based on confirmed orders. This is how growing businesses scale. Now here's the reality. Despite all these tools, only about 20% of micro, small and medium enterprises have access to formal credit. And why? Lack of awareness. dependence on large buyers, invoice disputes, technology challenges, and most importantly, businesses don't even know these tools exist. Let me leave you with one powerful insight. India does not have a demand problem. It does not even have a profitability problem. It has a liquidity problem. And supply chain finance is the bridge between growth and survival. If used correctly, supply chain finance can unlock lakhs of crores of working capital, strengthen micro, small and medium enterprises, and accelerate India's economic growth. This is not just finance, this is economic infrastructure. If you found this insightful, like the video, share it with business owners, subscribe to Facts, and comment below. Have you ever used any of these financing tools?